What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today. It is the 26th day of November, and here we are sitting at about $87.3 thousand with 9 hours and 26 minutes left in the day. Hit that like button, subscribe if you want to see more content like this, and let's get into it. I want to talk about Thanksgiving, because Thanksgiving is tomorrow. And in essence of that, I want to do a kind of Thanksgiving analysis. I want to do some short-term stuff too. We'll look at the 1 hour and we'll zoom out from there and go over some of the relative price action. But I want to look at what we've done over the, well, really over the past 6 years or so, because I think that's fair, right? We don't need to go into any other cycles past that. I think 5 or 6 years is fine dating back. Probably even relevant just to this bull cycle or last bear cycle is all we need. But we're going to go through all this and compare notes and see what we find with this Thanksgiving price action. So if that sounds good to you, hit the like button, subscribe, and let's get into it. We're going to go all the way back to 2019. We got a time machine right here. 2019. If you notice, on Thanksgiving Day in 2019, this was the beginning of what was a long consolidation phase that did not end up breaking out to the upside until January. We actually just had a massive move down, a flash crash, and our RSI found support right here at about the 15 level. We found support here before, we found support thereafter. Typically, whenever you find support at this level, when you bounce, interact with this level in the RSI, you will see about a month to 2 months worth of stagnation. And in this case, this was, again, back in 2019, a 42-day period where we moved sideways before we actually started to move up consistently. Okay, that we were consolidating. Not 42 days after we hit this trend line, or after we hit this level in the RSI, but 42 days that we were in this consolidation phase. Okay. Effectively, Thanksgiving time was boring, and then afterwards we moved up. And this was really like the holidays, right? Thanksgiving, Christmas, and New Year's Eve all in the same boring time frame. And then we moved up higher. We go to the next one. And here we also saw some very similar results. Now, it's not quite as long, but, and we didn't drop going into it. There's no low reading on the RSI or anything like that. But we did consolidate for, roughly 25 days, about a month, before we started to move up. And even then, we're still in this consolidation range for a full 28 days. That's a full 4 weeks. And then on the 29th day, that's when we started to move up. So about a month that we consolidated before we started to move up around Thanksgiving again. This time, we did have the December rally, though. Right, this is kind of in the midst of our bull market finale finish. We go to the next Thanksgiving in 2021, and a very similar result as what we saw to the last one, except this time we're moving down. We're in the beginning of a bear market, and here you consolidated for, roughly 17 days, about half a month. Very small amount of consolidation, but still some consolidation. You had a flash crash thereafter, and then you consolidated for quite a long time before you actually started to make consistent moves down, right? So short consolidation met by a month worth of consolidation, and then you moved lower. End of the bear market in 2022. I think this consolidation phase, this sideways stagnant phase, is longer simply because we're at the end of the bear market. That's probably why. But a full, I don't know, maybe is 53 fine? Is that fair? 53 days before we started to actually consistently move up. Again, this was from the beginning of November, the 9th of November, until January that we started to move up. Everybody was expecting that Q4 would be bullish, that we'd have a Christmas rally, but nope. The RSI got as low as, not the 15, but pretty close. Pretty close. And promoting similar results for a long phase of consolidation, just like the first iteration that we experienced, right? We go to the next Thanksgiving, and here we did not consolidate at all afterwards. We actually pumped, and then we went on a long consolidation phase. But we had consolidated at that point for over a month already, right? So again, consolidation, the reason why we didn't consolidate further on this Thanksgiving, the reason why we moved up first instead, is probably because we already had our consolidation phase. But you still consolidated. You were still boring for a little while. And then you were exciting for about 5 days, and then boring from really December until February. We thought the Christmas rally was coming in. We thought that we'd be moving up. January kicked off to a good start, but nope, we were just stagnant until February. Very, very boring times. We keep going through. Hold on, guys. Hold on. It's annoying. Okay, there we go. And here in 2024, did we go over 2023? No, that was 2023. Okay. 2024. Again, very boring. We were actually stagnant from November. I mean, really, until February, the end of February. And then we moved down. Very stagnant, right? We did move up a little bit after Thanksgiving, but basically we were just consolidating for a very long time. So if you're watching this video and you're like, okay, wait, so I don't really know. Does Thanksgiving tell us that we're going up or going down? There's probably just as many examples of post-Thanksgiving price action going up as there is of it going down. Maybe more suggesting that we go up, but to be fair, most of the iterations we went over were in bull markets, not in bear markets. So to be completely fair. But really the thing that we saw most of was stagnation, right? Sideways price action that lasted for, I mean, at least half a month at a bare minimum. But then that was met after we consolidated for half a month and then we broke out to the downside. We then consolidated for about a month after that, right? Still a long phase of consolidation then after, in the month of December going into January even, right? Hold on. I don't know about you guys, but we've just moved down a whole lot. We've just had our RSI come down to these same levels again. And I don't know about you guys, but I don't see any long, boring consolidation phase here. I don't. Do you see it? I don't see it. And I have a theory as to why it's so common to see these long, boring consolidation phases. And it's a simple theory. There's probably more to it than what I'm saying. It might be more... There might be something to do with taxes, the end of the fiscal year, stuff like that from a business perspective that might make sense for prices to be stagnant and kind of calm. But really what I think it is markets, regardless of if they're crypto markets, if they're real estate markets, if they're stock markets, commodities, whatever it might be, markets are pushed around by money. They're pushed around by large amounts of money. And if anybody has a large amount of money, if they have millions of dollars, hundreds of millions of dollars or more, they're probably on vacation in the months of the end of November, Thanksgiving time, Christmas, and New Year's Eve. They probably don't come back until after January is already on a roll. So all the big dogs, what I'm saying is they're on holiday right now. They're away from the trading desk. They're away from the places where they inject their liquidity into the markets. Therefore, the markets have no pulse. Or any pulse that they get returns back to normal, right? Or any drop that we get comes back to normal as well. So, while everybody's watching the chart 24/7, waiting for something to happen, the big dogs are on vacation, living their lives, not caring. And then whenever they come back in January or as late as February is what we've seen, then they start to push the markets around. And that's my theory as to why that is. And I'm not trying to discourage anybody. I don't care who's watching this, bull or bear. The worst outcome, I think, for any chart is not actually this. Because you can actually make money here. Or opportunity, right? Imagine after a month, we're all the way down at 56K. You can at least, if you save and you don't spend money for a month, or at least you try to save up as much money as you can. You have to spend money every month, right? I mean, if you're living life, unless you're homeless. But if it's 56K, I mean, I don't know. Even homeless people spend money, right? All I'm trying to say is if you can save up some money at the end of the month and we're dropping for a month, you have an opportunity to buy at a very easy level. But if we're just moving sideways, if you're shorting, by the way, you can also make money. There's ways to make money there. But if we're just moving sideways, nobody's really making money. Everybody's boring. They're waiting for something to happen. And it's kind of funny that this would happen right here at such a, what is basically a critical moment where hold on, let me put this up, where we've just closed in below our 50-week moving average, which a lot of people use that to determine that we are in a bear market. I'm not completely convinced yet. I want to see it. But what an interesting time where now you'll have a lot of people placing bets either to go long or to go short. We'll see how the market sentiment grows or develops over the next month. But I think it's very obvious at this point that we likely don't see any kind of massive recovery soon or any kind of continued move down until we've consolidated for about a month or two. It very well could, and I know that it sounded disbelievable whenever we said it here. Hopefully after this analysis it's a little bit more believable, but we might just do this until January, right? Like we did kind of back here. I mean, this was until February. Like we did back here, but before we pumped, right? Right, and then, I mean, to be fair, from December, we didn't pump until February. We were sideways. We had a nice little pump. The ETF came out, and then a dump, right? We really didn't go anywhere. We stretched the norms a little bit and returned back to the median right there, and then we pumped. But it was in February. Long, boring, right? Q4, I think if this video has shown anything, is that Q4 is not as exciting as maybe it has been in prior cycles. Right, this cycle and the bear market and the ass end of last cycle wasn't that exciting. Actually, I shouldn't say that. The ass end of last cycle was exciting. Right here, let's see, where are we? All the way over here, yeah. Right, that was Q4. That was good. But still a boring time between November to December. There was still a boring moment here in the heart of Q4 right there. I don't really have anything else that I want to say. I do want to look back real quick and just see, like, look at how big this range is here. We've got a kind of from the center, I would say. Let's put it like, try to eyeball it at the center. You stretched 15% out to the upside. You stretched 8%, 9% down to the downside, right? Let's actually do that. I'm kind of curious. In these boring ranges, how much did we go? You know, if you had like a middle, maybe I shouldn't do that, right? Because the middle is subjective. I could say that's the middle, and I think we could all agree, but this is the low, this is the high. That's a 22% range up, 18% range down, right? %, range up again. And the biggest drop that we saw was maybe about 16%, but from the high, it was 18% again to the downside. Weird, actually. 22 and 18 came up twice in a row right there. Hold on. Are we on to something? Is this it? Is this the secret sauce? I don't think so. That doesn't look right there. From the high to the low, more like 12%. Well, what about this consolidation range? What about this? From the low to the high, it's 25%, not 18% there. And then high to low, that's more like 20%. Still kind of close. Still kind of close, actually, for that consolidation range there. Low to high, 18%. Hey, there it comes up again. That's weird. That is kind of weird. Which would then mean 22%, right? No? 15.8%. How does that happen? This one's a lot tighter. I don't want to measure that. That's a much tighter range, obviously. It's going to be like less than 10% both ways, probably even less than 8% both ways. And then here, from a high to a low down, is about 18%. And then from a low to a high up, 22%. Again, 18 and 22. What? Why? Why is that a thing? So 3 times we specifically saw that the range from the high to the low was 18%, and from the low to the high was 22%. If this is the low, now that's the thing too, and we didn't. I should have identified this too, but within those ranges, we'd seen it where you consolidated and you still went lower than your initial read on the RSI, right? you could still go lower. So I don't know, move up 22% to around $100,000 from this low here, right there at prior support. 99K prior support here, prior resistance there, in the heart of this overall range. It actually kind of makes sense. That might be exactly what we do. Right there around the 0.5, that might be exactly what we do. And we don't get above that level until January if we do get up above it at all. Or if we're going lower, we might not, to the downside, we might not get below this level here if you're expecting a bear market until January. We're just going to be stagnant and range bound between this area until January. I don't care how convincing the Christmas rally is. I don't care how convincing the Christmas dump is. Whatever it might be, it might not be convincing at all. But all I'm trying to say here, guys, and it's very unfortunate because I don't like this, but I have a feeling that day after day as I make these Bitcoin videos for the next month or two, it's just going to be sideways and boring for the reasons that I've said. And I'm sure, again, there might be tax reasons, there might be legal reasons, fiscal reasons why the market moves sideways beyond my theory here. But I think the real theory is just that the big dogs with the big money that push the market around and make the big moves, they go away. They're on vacation. Why wouldn't they be? They got a ton of money. They can spend the next couple months on a beach somewhere, on their yachts, doing whatever they want, bringing their family and their friends and their whatever. I don't know. And then they come back after about a half quarter of debauchery and they start pushing the markets around. That's my thoughts. Hit the like button, subscribe. I'll see you on the next one. Take care. Bye-bye.